Let's go.
Hello, everyone, and welcome to Zephyr's Adjusted for Risk podcast from the shores of Lake Tahoe. Now, there are many different investment strategies that employ unique investment philosophies, which is fantastic for investors, as it gives investors the ability to better align their investments to their values, beliefs, and investment objectives. Today, I have on two fantastic guests who are going to tell us all about their fascinating international investment strategy. But first, today's episode is sponsored by the award-winning Zephyr, which helps investment professionals make more informed investment decisions on behalf of their clients. I am very honored and excited to welcome Democracy Investments' Julie Kane and Chris Browne. Julie is the CEO and managing partner of Democracy Investments and has been recognized as one of wealthmanagement.com's 10 to watch in 2024. Julie, congratulations on that great recognition.
Thank you, Ryan.
Christopher Browne, who is the CIO and partner of Democracy Investments. So first of all, thank you both for being on the podcast. Really, it's a great honor to have you on. Julie and Chris, can you please tell us a little bit more about yourself and Democracy Investments?
Sure. And thanks for having us, Ryan. It's an honor to be here. So Democracy Investments was formed collectively by three partners, myself, Chris, and our third partner, our chief economist, Rick Rakowski. And it was born out of concern for trends in democracy around the world. And we wanted to create an alternative strategy for investors that can help reverse those trends. And as you pointed out in the very beginning, give an alternative that allows investors to invest with their values. So we formed the company on July 4th of 2020 during COVID, and we launched the Democracy International Fund, ticker DMCY, over 3 years ago in March of 2021. My background, I grew up in Washington, D.C., went to UVA, joined Naval ROTC, and got a billet to flight school. So early in my career, I was flying helicopters in Coronado in the Philippines, got to fly the Navy SEALs around, and had a front row seat watching what was going on in the Philippines, trying to prevent a coup. So at a very young age, I became aware of trends in democracy around the world. I was recruited out of the Navy by SEI Investments, and our fund now sits on their platform. So I've kind of gone full circle. After SEI, went to grad school at UCLA, spent some time at Accenture, and then worked at Autodesk Ventures, where I met our CIO, Chris Browne. We were actually working together during 9/11. Watched the world change dramatically after, as we all know, after that event. We were both recruited to finance. I went to Charles Schwab Advisor Services, where I helped all advisors who custody with Schwab, and then spent a lot of time at Wells Fargo. But the entire time, I was bugging Chris, what can we do that would have, what impact strategy could we do that could actually make a difference in the world? So I'll pause there and let Chris introduce himself.
Sure. Thank you very much. So my background really quickly, after graduating from UC Santa Barbara, went into fixed income with Pacific Income Advisors down in Southern California and Lloyd McAdams. Then came up for Harris, Bertal, Sullivan and Smith in San Francisco, large cap growth equity. Went back to business school. I'd done some work. My family has a long history in Latin America, particularly in Venezuela. And had gone down there and done some work with my dad, and had actually, my folks were actually in the middle of the Chavez coup in 1992, the golpe, the Por Ahora stuff, literally bullet casings raining down on my mom. They were driving by the Miraflores, which is the equivalent of the White House, and that coup went down. So sort of have seen firsthand. From that perspective, what sort of more totalitarian regimes can do to a country. What went to international business school. I went to Thunderbird, got my international MBA. Did some investment banking. Worked at Autodesk with Julie in their venture capital group. Then I went on to California Investment Trust, managed all of their fixed income there. Then to Franklin Templeton, where it was more of a where I did more multi-assets because I had this particular broad background. Then that led us to our fateful dinner during COVID, when it was the concerns were, okay, Julie's concerns about the Democratic side, but then how do we make this into a product that does or a solution that does more than just your values? You actually can win at this game. And so we thought that that led us to, and Rick was the final piece of the puzzle that suggested using the Economist Index as the way to tilt an international portfolio.
Fantastic. First of all, lot there. Julie, thank you so much for your service. That's fantastic. I'm sure you have some great stories to go along with being a pilot and what you saw. So thank you very much for your service. Chris, I can imagine that story, like your two stories that you guys have, personal stories, and I enjoy stories, and those two, I'm sure you guys both have a lot. There, Julie, you talked a little bit about the history, where the idea came from, but can you give us a little bit more detail behind the history and mission of Democracy Investments?
Sure, happy to, Ryan. So we actually formed the company once we had secured an exclusive license to use the Economist Magazine Democracy Index. So we have exclusive rights to use that data for financial products globally. And when we secured that license, that's when we formed the company. And we're all huge fans of the Economist Democracy Index. They've been tracking country democracy scores for almost 20 years. And there are 60 different indicators, which are on our website. Okay. And they roll up into the themes of electoral process, functioning of government, political participation, and civil liberties. And as Chris mentioned, Rick actually came up with the idea because in his spare time, he's got his PhD from MIT. He was modeling coronavirus death rates using that data. So the index was on his desk when we were brainstorming. And that's how we came up with the idea. And our mission is very simple. It's to provide investment strategies that both protect and grow democracies and give investors an alternative to invest with their values.
Fantastic. I think this next question, you might have answered it, but can you get a little bit more into the investment strategy and really how it came to light? I think it's fascinating, and both of yours and your partner, have this background in, democracy, travel, seeing, all the issues out there in the world and trying to solve it. Is there any other information there?
Yes, sure, absolutely. So we started actually down the path of trying to figure out a more actively managed strategy. Okay. And we realized that was going to be very expensive and very hard to keep the data fresh. So then we said, well, let's instead create an alternative to compete with the passive international index strategies. There are trillions following the ACWI ex-US, MSCI, and FTSE international indices. So we decided, let's create a new index. So our index is both market cap weighted, like those strategies, and it's democracy weighted. And we do that by starting with the same 2,900 securities, large and mid cap, mostly developed markets. And then we look at each security's country of risk, apply the country democracy score for that security's country of risk. And that results in very neutral tilting towards democracies and away from authoritarians. So for example, we have overweighted Norway, New Zealand, and Sweden by over 20%, Taiwan, Canada, Germany, and Australia by over 10%. And then we downweight, and this is all relative to the starting universe. We downweight China and Saudi Arabia by 73%. And then we also downweight other authoritarians like Egypt, UAE, Turkey, Mexico, Hong Kong, and Singapore. And we don't screen any country out. There are other strategies out there that are, ex-China or ex-authoritarians, but we decided to keep every country in. And then as a country improves, their democracy goes up, and the economist is tracking every year with those 60 indicators that I mentioned, then we adjust the tilt appropriately. By the same token, if the democracy score drops, they get less capital. So underneath it all, we are fueling the growth of more democratic economies, and we're incentivizing authoritarians to become more democratic to get more capital. And our chief economist calculated that someday, if we're as big as a Vanguard fund, that would equate to an entire month of net operating cash flow coming out of China.
Wow. So not only, again, it goes back to that original statement. If you invest in a strategy like this, your money is going to your values and beliefs. Also, it's an investment too. So there's a lot of great things going on here that.
I'd love to make the investment case around it, which things sort of come into a panoply around it. In that, given where we are, globalization had been advancing for 30 years, and with the idea that if we just fed a bunch of capitalism to folks, that they would become more like us, and eventually we would just be all global traders and kumbaya. I went to Thunderbird. I went to an international business school in the late 90s, and that's what we were taught, was that this was an opening, this burgeoning global trade. There wasn't a lot of debt on the books for folks, and so we embarked on this 30-year odyssey. Unfortunately, from the authoritarian standpoint, that business case didn't work out. And what you see is that an authoritarian in these developing economies has to sit on top of things. And so it's a simple bet. If you're going to sit and say, make a simple tilt to an international index, now, given where we are in this environment, in this economic and geopolitical environment, it's a pretty simple thing to tilt away. You've seen it, whether it's been in the PRC or other authoritarian environments, they have to be the top dog. And they will be the lid on growth going forward, whereas in more democratic societies, they allow for more innovation, they allow you to keep more of your profits, they allow more for protections around private property. Those types of things, I think, will be at a real advantage going forward.
Fantastic. Chris, you brought up, I think this is a great segue into international. And where do you see value in international? Because like you said, there's a lot of geopolitical risks out there, maybe more so, and the tensions are as high as they've ever been. What makes international as an investment attractive now?
Well, if I told you that I can buy you the same dollar of earnings for 33% off if you just step outside the United States, are you interested? So right now, the multiple difference between the U.S. Market and the international market, global international equity markets, is really the multiples 2/3 of the U.S. market. So you're getting a tremendous discount. If you look at any of the major houses, whether it's Vanguard, whether it's BlackRock, whether it's JP Morgan, all of them, and you go and you look at their capital market expectations for what the next 10 years is going to look like, almost all of them have international ahead of domestic equity. Now, that's a 10-year time horizon. There's a lot of volatility and all of those things in between that. But if you're doing a strategic asset allocation, most folks in the United States are underallocated to international. And there are always going to be geopolitical concerns out there. Are they manageable? I think so. Would they hit the United States just as hard in a shock scenario? I could argue, because you sell what you can, not necessarily what you have at that particular point. So I think that there are a number of things that despite all of the fear and tension out there, make international very attractive.
So you mentioned the risks. Obviously, there's going to always be geopolitical risks. Do you think that risk premium right now, investors are obviously getting rewarded enough to take on that geopolitical risk and the risk that's involved with investing overseas?
Yeah, I do. I mean, I look, the stock market spends a lot more time going up than it does going down. And I mean, I'll throw all the tropes out there. It's not timing the market, it's time in the market. Would I say back up the truck and dump everything into international right now? No, but if you should start, just making some strategic reallocations on a systematic basis. And I think that's that will end up being a little bit more attractive. You probably, on a market cap weighted basis, it's basically 50-50. On an index weighted basis, it's about 60-40 US to international. But most folks have less than 5 or 10% international right now. They think that they're going to get it from US multinationals. I think that the way that global trade flows are going, you're going to see it's going to be more back to the 70s and 80s, where international didn't quite have the correlations that they do with the US equity market. So I think you'll get some diversification benefits there. And I'm just in general, I mean, like I said, history doesn't repeat, but it rhymes. And I think that a lot of the stuff that we saw in the 70s and early 80s, you're going to see some similar things arise, which I think will bode well for international.
Interesting. And you go back to COVID, when this really came to light, your strategy. It's probably one of the only, I don't want to make light of COVID, but probably one of the only good things that came out of COVID was your strategy. But have those broken supply chains that happened during COVID and all the chaos, have they really been repaired? And do you think, we've got all these elections going around the globe, especially here in the US. Are you worried about, those broken supply chains? Are they going to be repaired, or are they going to go back, like you said, just be more, less globalized?
They're shifting, right? So Mexico just passed China as our #1 trading partner for the United States. You're just going to see shifts in supply chains where, again, and this gets down to the private property issues, right? If I don't feel like my plant, my people, my profits are safe in your country, I'm probably going to do business elsewhere. Again, with tropes, capital will go where it is treated most kindly. And again, I think that all of these things, the supply chains will shift. You'll see stuff moving from the PRC to Vietnam and Malaysia outside. You're seeing stuff moving to Mexico. And those trends will continue, I think.
Got it. For both of you, let's start with you, Julie. I often like to ask this question: what keeps you up at night? So when you're, these risks and investing overseas, what are some of the risks that keep you up at night when investing overseas?
Well, those things are why we formed this company, to be honest. So I worry about trends in democracy. Okay. And why are we funneling trillions of dollars to authoritarians who have more war, revolution, and civil unrest? Why aren't we instead supporting democracies who have freedom of speech, higher functioning of government, enforce the rule of law and property rights, and they're better at avoiding economic crises? So I worry about trends. I worry about demographic trends. Okay. So we're preparing to present at the Copenhagen Democracy Summit, and our chief economist did some demographic analysis. Today, there are only 3 democracies in the 20 largest countries in the world: the US, Japan, and Germany. By 2050, Germany will fall off, and there will be only 2 democracies, and Japan will drop in the rankings by 5, and US will drop by 1. So time is of the essence. We've got to reverse these trends and vote with your dollars and support democracy. Chris?
What keeps me up at night with international investing is any of the shocks that we've talked about. I think, right now, and this is a macro thing because this will affect both the U.S. It's more just the general market commentary. The yen carry trade and Japan defending the yen right now is, excuse me, I'm watching the any geoconflict. I mean, the escalation of anything in the South China Sea is obviously going to be fairly important.
Mhm.
But those are temporary. I mean, those are shorter term things. I think I'm actually more excited about the opportunities that are out there. You know, we've been through a very tough 5 years, and my sense is that we've learned a few things, and hopefully we can make some adjustments to manage those. But there's a lot of good out there, and we think we think that internationals oversold or underbought, and that because it's so diversified and we're global, we're everything outside of the United States, that diversification allows us to sleep fairly easily at night.
Yeah, one thing we forgot to point out with our tilts. So the typical all world ex-US strategy is 75% developed markets and 25% emerging markets. Because of our tilts, DMCY is 85% developed markets and 15% emerging markets. So we skew towards developed markets.
So while there is, it's a passive investment, you still have tilts to make it somewhat active, right? You have some flexibility there too, or is it all based on the index?
This is just the way that we just take what the numbers spit out, and that's our port, and that's the index, right? And so we were shocked when it. I mean, the industry tilts were, I thought very defensive and appropriate for we were more heavier towards consumer staples that tilted away from consumer discretionary. We had a neutral energy weighting, which I thought was interesting because we were significantly underweight Saudi Arabians and the Middle East, but those flows went to Canada and Norway. Okay. And so, and for folks that are, again, on the impact side, at least we don't claim to be impact, but you're getting your energy from a friendlier source in that, or you're funding a friendlier energy source in that particular case. So all of these things, worked out, and I wish we could have designed it, but we're fairly happy with, very happy, as a matter of fact, with where these things came out.
Perfect. Julie, you mentioned earlier, I think you said 2050, there could only be two true democracies in terms of largest countries, Japan and the US.
Correct.
How hard are you finding less opportunity, or is it just harder to find opportunities when the number of true democracies out there in terms of countries are shrinking, especially since it's an ex-US strategy?
Well, that's exactly why we tilt. And as Chris mentioned, we have a very systematic process. We have this, you're getting the same diversification, same 2,900 international equities, but you're getting more of the democracies and less of the authoritarians as defined by the Economist Democracy Index. So it's the only strategy I know of for all world ex-US that is doing what we're doing. And again, holding every security accountable to their country democracy score. All the other large international indices strategies, they have Tencent and Alibaba in their top 15 holdings. We do not. And even the international ESG funds can have those in their top 15.
Interesting. And a lot of it goes back to, I often talk about to investors and financial advisors, make sure you know what you're investing in, especially really passive, passive investments that track it. You still got to make sure you know what you're investing in to make sure those investments align with your client's investment objectives. Because like you said, Julie, there's a lot of investments in the underlying strategy that might just raise red flags.
Exactly. And over the years, authoritarians have pressured the indices to allocate more and more to them. And again, they're just looking at market cap. They're not looking at any other factor, whereas our passive index strategy with democracy as a factor incorporates geopolitical risk.
Interesting. Fascinating strategy. And I'm assuming, like, as a holding within a client portfolio, investment portfolio, you would use this like you would, just a core international fund within a portfolio as a diversifier, get exposure to international ex-US.
Correct. We're a direct competitor or lift, clean, and replace for any sort of ACWI ex-US or FTSE ex-US index-based product.
Fantastic. One last question about the holding. So many big, let's for example say Nestle, right? It's a multinational company with probably plants in a lot of different countries, maybe even China and other countries that might have a lower democracy rating than others. How do you, or how does that fit into the strategy and determination if that country should fit in there? If, let's say, 50% of their revenues come from China?
You want me to take that, or do you want to take that, Julie?
Yeah, go ahead, Chris.
Yeah, sure. Basically, what we're trying to do is, even if they're a foreign national company, so a company like Nestle is a Swiss company, right? A Swiss foreign national. Yes, they do business. Yes, they have operations, but all of that capital eventually is going to come back and is controlled, and the levers are in Switzerland. Same thing for a company like Ferrari. It trades on the London Exchange. Its headquarters are technically in the Netherlands. I think we'd all agree that that's an Italian company, by where all the operations, where most of the everything culturally, all of that stuff. We do the same thing. Alibaba is listed as a Bermuda company. We all know that that's a PRC, that's in the PRC. So we make an adjustment. We use Thomson Reuters' definition of country of risk, which is a multi-factor thing that encompasses all of the stuff that I've just discussed, so that we, you can try and get too fine or too granular with stuff. I mean, there's a company like Rio Tinto, when you get into the mining business, that gets a little more challenging. But really, they divide out pretty fairly easily once you do the quick cover lift and go, okay, yeah, is their management all one nationality or a series of nationalities? Their board, you can sort of look through all these things, and once you sort of take a look at it, go, yeah, okay. And those are all really fairly clear.
Fantastic. Thank you, Chris. Thank you, Julie. Both of you, for coming on the show. Like I said, it's a real honor and privilege to have you on. It's such a great story. I love the story that both of you have and share for the love of democracy and how important it is moving forward. It's a great investment strategy. So where can the audience get more information about democracy investments?
Thank you so much for having us, Ryan. Our website is democracyinvestments.com. And you can reach out to me. You can reach out to either of us on LinkedIn, and we'd love to get your feedback. And please consider voting with your dollars.
Fantastic. Thank you so much for listening to this episode of Zephyr's Adjusted for Risk podcast. You can watch all of our other podcasts and episodes on the Zephyr YouTube channel, iHeartRadio, and Spotify. Thank you very much, and have a great rest of your week.